Bam, 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 bam. Bye, 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 bye. Bam, bam, bye, bye, bye. Welcome back to Strongman Personal Finance. I'm actually getting sick, okay, but I still have to get these paid videos done. If you want a paid personalized video, click this link right here. As a matter of fact, let's go ahead and click the link, and then we're going to go straight into the analysis of how much now. So if you click this link, it does not take you there. Can I even click the link? All right, that is extremely annoying. So I can't click the link, but if you click the link, it's so annoying. If you click the link, it'll take you to all the instructions you need to get a personalized video. It's $50 now. I'm getting too many freaking requests. All right, so let's go ahead and do this paid video and talk about PayPal. So this guy just wanted a financial statement overview of PayPal. What do I think about PayPal stock? I've talked about Snake Snarl before, okay? What do I call it? Slay Cowl. All right, that's just garbage. I'm sorry. Anyway, look at there's a PayPal ad. Okay, that's scary. Well, so I have PayPal stock up here on stock analysis. I guess that's why. But isn't that funny? There's a PayPal ad. Anyway, I've talked about PayPal before, and honestly, my biggest reservation about PayPal, I mean, it's a profitable company. They're growing revenues. It's a great company. It's a good business. It's a lot better than tattoo truckers, sweaty, syphilitic, you know what. But there's 100,000 different payment processors out there, okay? If you click on the link to pay me $50, I've got multiple things on there. And there's either Zelle, which is completely free. I should add that too. That's a huge interconnected bank transfer system. You basically just transfer money for free. You don't have to pay any fees. Venmo, which is owned by PayPal. There's just 100,000 different ways to send money. Okay, Cash App. There's 100,000 options out there. What makes PayPal special? I don't know. Can somebody tell me? I mean, PayPal. I personally use PayPal for most of my business, but that doesn't mean that I would jump ship somewhere else in a heartbeat if I could find something better. Honestly, it's just personal preference. I've just used PayPal for a while. So let's look at PayPal's stock performance. So it's gone up. It went up massively during the clown market. It just went absolutely insane. Like, holy crap, man. And then it absolutely collapsed. And now it's trading extremely cheaply. It's also pretty popular because we know the world-famous investor, Jeremy Lefebvre, has invested in PayPal. So let's go ahead and look at the financials. How has this stunk done? Well, we could see revenue has steadily climbed. Now, the revenue growth rate is slowing down, okay? Revenue was still growing, but this company is, number one, facing a ton of competitive pressures. There's 100,000 different ways to send money. I use Apple Pay. I use Cash App. I use PayPal. There's 100,000 ways to send money to people. So when it comes to a company eventually reaching full maturity, because PayPal's been around for a long time, a very long time. This is one of the OG payment processors. And then, the amount of competition out there, and then this company reaching full maturity, yeah, the growth rate's going to slow down. But they're still putting up pretty impressive, pretty decent growth rate numbers. They're at least beating inflation, okay? So revenue has been steadily climbing. I suspect it will continue to climb into the future. It just won't be at the astounding rates that you may imagine, okay? So if you're doing a projection, you may want to grow revenue not super quickly, okay? But I don't do those anymore. It's just a waste of time. Let's look at shares outstanding. So they're slowly buying back stock. Very, very, very minutely. Okay, they had looks like they recently accelerated buybacks, though, which makes sense because the stock price has gone down. Let's look at margins. What's happening to margins? So we see gross margin trending downwards. We see operating margin staying the same, roughly. It's roughly stayed the same. That's good. And we see bottom line profit, roughly staying the same, or it's in line with historical averages. So overall, this is a very profitable company, okay? We also see free cash flow margin has been consistent. I mean, it's probably a little bit lower than average. We'll see why in a second. But overall, I mean, it's a very profitable company, but growth is massively slowing down. Okay. And I suspect that will continue in the future because there's so much competition. What makes PayPal special? Just because the stock price goes down doesn't mean it's a buy. I mean, you could have bought PayPal, and I was like, I was interested in PayPal. I was like, oh, I don't know. And then I did a little DCF, and I was like, I got like a $40 or $50 buy point. And I was like, yeah, maybe I'll wait till PayPal gets down to 40 or $50 before I even consider buying it as like a speculative play. And it's getting there, and it can continue to drop, okay? Just because the stock goes down doesn't mean it can't keep going down. Even the world-famous Lefebvre has trouble. And we'll look at the balance sheet in more detail in a bit. Let's look at operating cash flow. How's operating cash flow done? So operating cash flow over time, it's in line with historical averages. So I don't see a massive drop in operating cash flow. It doesn't have insane growth rates, but it's still pretty good. Capital expenditures, roughly in line with historical spending. Acquisitions, they've had a couple here and there. The last big one looks like in 2021. Where do they buy it? The last quarter of 2021. Share repurchases, they're actually buying back shares. They're spending a significant chunk of money buying back shares. Debt issued or paid. I see random debt issuances here. I'm sure that's related to acquisitions. And let's see. But overall, like, it's a decent company. Okay. So overall, I don't see any like horrifying trends. I mean, the main thing you want to pay attention to is profit margins are within historical norms, but revenue growth rate is slowing down. It's growing, but it's slowing down. Okay. Just like every other company. And there's a lot of competition. Let's go ahead and look at the most recent quarterly reports, the 10Q. You can find these. You can go to basically the best way to find these. What I do is I go to the company's website, or I'll go to Google and I'll type in PayPal investor relations, or if I wanted to find Tesla investor relations. And I go to the investor relations page and it takes you to a direct link for quarterly reports. Okay. And that's how I found this. It's pretty easy to find. Okay. So I highly recommend you look at the most recent quarterly report. If you want more detail, then you can look at the financial or the 10K. So here we have all the financial statements. We have the notes, MD&A, and then we have risk. So let's read some of the risk factors. Let's see. Okay, generic government regulation. Okay. Change the payment card networks or bank fees could harm our business. Brexit. The UK's departure from the EU could harm our business. Blah, 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 blah. Okay, if we're unable. Okay, I don't see any I didn't see any crazy amounts of risk factors there. Okay, I don't think PayPal's going out of business anytime soon. Let's go ahead and look at the balance sheet in more detail. So this is the condensed consolidated balance sheets. This shows the change in PayPal's balance sheet from December 31st, 2022 to March 31st, 2023. So over the course of 3 months, this is the most recent report I could find. So let's see. I like to go line by line and compare. Okay, cash, nothing really changed. Short-term investments went up a little bit, nothing crazy. No change in loan interest receivable. Net of allowances. So it looks like they've increased their allowance account. Basically, what that means is some of the loans money that they've lent out, people are defaulting a little bit more. The likelihood of default is a little bit more. That's why their allowances have gone up. Okay, in general, it looks like. Funds receivable and customer accounts, no real change there. And prepaid. So basically, overall, nothing really crazy with current assets. Let's look at long-term investments. Long-term investments went down a little bit, nothing crazy. PP&E, no change really. Goodwill went down a little bit, so it looks like they had some kind of write-down on goodwill, some kind of impairment. I wonder what that was. Intangible assets went down a little bit. That's nothing crazy. Amortization probably. And other assets, whatever that is. So basically, overall, the only crazy thing I see on the asset side, and it's not even crazy, it's basically nothing, is they had a tiny impairment on one of their subsidiary companies that they control because goodwill went down. If goodwill goes down, there's some kind of impairment. Okay, so goodwill cannot go down unless there's an impairment. Goodwill cannot go up unless there's some kind of acquisition. All right, current liabilities. Let's look at the debts. Nothing crazy. Funds payable and amounts due to customers, no change there. Accrued expenses and other liabilities, nothing there. So overall, I mean, nothing really crazy with current liabilities. They have more current assets than current liabilities, okay? That's good. You don't want to have more debts than assets. Long-term debts, deferred tax liabilities, and long-term debt. So basically, overall, I mean, no crazy changes in their balance sheet. Let's look at their equity section. Treasury stock. So they're buying back shares, okay? When you see the treasury stock account get more negative, they spent about, looks like $1.5 billion on share buybacks in the 3 months that covered this report. They're buying back shares, which is actually, I would say it's a good thing because at least the stock is cheaper now, okay? So they spent about $1.5 billion in share buybacks, it looks like. Additional paid in capital, a little bit of share issuance. That could be stock options. Retained earnings went up, so they've been booking profits. And accumulated other comprehensive loss, basically no change. So overall, their total equity went down. They lost book value, I guess you could call it, because they bought back shares. They took cash out of the business to buy back shares, but that rewards the shareholders. So overall, I mean, the balance sheet's fine. I don't see any like massive issues. Nothing crazy right here. Okay. We've already covered profits, basically. Let's see if anything stands out here, if anything changed significantly. Transaction expense. Transaction and credit losses are up slightly, but nothing crazy. Customer support is down. Sales and marketing expense is down. Technology and development expense is down. General and admin is down, but they had some restructuring charges. So basically, they're cutting a decent amount of expenses. So some of their like generic operating expenses, sales and marketing, customer support, tech, that's down. But they had obviously technology or transaction expenses increased, and they had some restructuring charges. So overall, they're cutting some costs in some areas, but they've had some increases in others. I mean, obviously, credit losses, that makes sense. Interest rates are higher. Economy's bad, apparently. Whatever. But overall, their operating income is pretty healthy, which is good. You want strong, healthy operating income, not like Palantir, where a huge part of their profit comes from interest from treasuries. Oh, wow, treasuries and a company. Wow. Is this a bond fund? Earnings per share is up. Shares outstanding are down. Okay. Let's see. Comprehensive loss. What's happened here? Foreign currency transactions. Let's see. Unrealized gain or loss on investments. Wow, they've had some gains on investments. Okay, good for them. So this is the statement of comprehensive income. This is stuff that skips the income statement and goes to the equity section. This was a big deal with that stupid company that went under, the bank, Silicon Valley Bank. This is something you need to look at this for banks, okay? For this company, I mean, I don't see anything crazy going on here. There's no massive craziness. So I wouldn't worry about that. But when it comes to banks, yeah. All right, equity, the equity section. Let's see. So they issued 5 million? 5 shares. So they issued 5. Is that 1,000? Oh, it's in millions. So they issued 5 million shares over those 3 months through common stock and stock-based awards issued and assumed net of shares withheld for employee taxes. So they issued some shares. They issued 5 million, but they bought back 19 million. So there was a net decrease in shares of 14 million. So their shares outstanding are going down. Treasury stock, they spent 1.4. Okay, I was slightly off. 1.4 billion, or was I? Maybe not. They spent $1.4 billion buying back 19 million shares. So a rough amount of how much they spent per share. So on average, they spent, they bought back 19 million shares at an average price, and this is rough, of $75. Not bad. Okay. Not bad. I guess they could have obviously waited and bought him back cheaper, but you can't always do that. So they're buying back shares pretty cheaply, at least relative to its prior evaluation. Additional paid in capital went up a little bit through stock-based compensation expense. Basically, when you have stock-based compensation expense, you're recording debits to the expense and you're crediting an equity account because you're giving out shares to the employees basically. Accumulated, we've already seen that. Retained earnings went up because of profit. Duh. So overall, their equity went down, but that was because they spent $1.4 billion on buying back stocks. Okay. Let's see. Nothing there. Let's look at the statement of cash flows. Let's see what's going on here. Non-cash transaction and credit losses, depreciation, amortization. I'm seeing if there's anything crazy that sticks out. Stunk-based compensation. Wow. They have a pretty significant amount of stunk-based compensation. So when they're buying back shares, just remember, every share they buy back is not a net reward to you. Some of those buybacks are because of stock-based compensation, but net on net, they are reducing shares outstanding. But think about it. Some of the cash is leaving the business to buy back shares that they have given to employees. So it's a real expense. Okay. I'm just saying. Net gains, losses on strategic investments. Wonder what they made money on. That's interesting. Other. Look at this description right here. Other. What does that mean? I don't know. What does that mean? Other. Some other kind of gain or something. Okay. Yeah, I don't see anything crazy. I mean, they have healthy operating cash flow, nothing out of the norm. PP&E, nothing crazy here. Purchases and originations of loans receivable. So they're giving out more loans. Look at that. Their amount of loans they're dishing out has actually gone up pretty significantly. And repayments of loans have gone up. So it looks like they're stepping up their loan game a little bit, at least from the prior 3 months for the prior year. Let's see. Yeah, basically it. I mean, basically they're just giving out more loans, it looks like. Could be a timing thing. Let's see. Repurchases of treasury stock. So their stock buybacks are roughly in line with the prior year. Let's see. Tax withholdings. Borrowings. Funds payable and amounts due to customers. So it looks like they had to give back $1 billion to customers withdrawing money, it looks like. So overall, like they spent a lot more cash went out from financing activities, mostly due to repurchases of treasury stock and returning amounts due to customers. So I mean, there's nothing like unusual about this company. Like I don't see it imminently going bankrupt. Let's see if there's let's see. Okay, they reclassified some stuff, but it's like insignificant. Use of estimates. Yeah, these are like generic things. So okay, let's look at disaggregated revenue. So let's look at the trends here. The following table presents our revenue disaggregated by primary geographical market and category. So year over year, U.S. revenues are up by 4147 divided by U.S. revenues are up 13%, and I'm part of that because I'm paying PayPal fees every time you clowns pay me. And international revenues are up 3%. So the vast majority of their revenue growth is from U.S., from one country. And the vast majority of that revenue is from transaction revenues. And I know exactly what that is. You guys, every time you guys send me $40, PayPal takes a cut of that. They get like $1 and something. I know exactly what that is. And then revenues from other value-added services. What else are you doing there, PayPal? Let's see. Okay, so that's the main thing I see. Most of the revenue growth is from U.S. There's a lot of money trading hands in the U.S. A lot of PayPal, my snake snout going on. All right. Earnings per share. That's how they They're showing how they calculated diluted earnings per share, which you basically assume that all dilutive securities that could result in additional common shares being outstanding, you assume they're all outstanding as of the beginning of the accounting period. At least that's what I remember. So, but I mean, there's no difference between diluted and basic earnings per share. Okay, there's not a massive variance there. Let's see, goodwill. What happened to goodwill? They had an adjustment to goodwill. The adjustments to goodwill during the 3 months ended March 31st pertained to foreign currency translation adjustments. That's interesting. I have to look more into that. May have to brush up on my goodwill knowledge. Yeah, so it actually wasn't an impairment. It looked like it was just some kind of, translation is like if you own a foreign company, you control it. You have to combine the companies together. There's this huge process that's annoying where you combine the balance sheets of the companies together, and it's just part of that is like you have to translate the international company's balance sheet, which is in another currency, to the U.S. currency, and it just creates differences, and then it's all this crap. It's a freaking pain. I hated that in college, but yeah, that's where the change in goodwill, but it's not a massive change. It wasn't like this huge write down. Okay, they did intangible assets. Let's see. Nothing really crazy. I mean, there's nothing like crazy going on with this company. Like, I'm trying to see if there's anything that's like absolutely crazy. Leases, supplemental balance sheet, cash flow, crypto asset safeguarding. Oh my God, what is this? We allow our customers, and I think I've seen this when I've logged in, to buy, hold, sell, and receive. No, stop. Trade crypto on this platform. No. Stop it, PayPal. Oh my God. The following table summarizes the significant crypto assets we hold for the benefit of our customers and the crypto asset safeguarding liability oh my God. So they've increased the amount of people are putting more crypto into PayPal. What a freaking joke. So stupid. Basically Bitcoin and Ethereum. Okay. Let's see. Sorry if I'm boring you. I'm just freaking I'm sucking tonight. Let's see. Interest income is up massively. What a shock. Wow. Interest income is up because of interest rates are up, obviously. Funds receivable. Let's see. Yeah, I'm trying to like find anything that's crazy on here, but like really when it comes to this company, you gotta, do your own analysis and say, hey, what is this company's competitive advantage over other companies that are payment processors? I mean, I personally use PayPal because it's the oldest thing that I know. It's the oldest thing that's the first thing I ever heard of when it came to a payment processor. I'm comfortable with it. The fees are reasonable. I mean, they can be annoying sometimes. I don't necessarily trust Zelle, even though it's, people say, "Oh, it's great," but I hear at least reputationally that there's a lot of sketchiness or scams that go on with Zelle. And I don't know, PayPal. I just like PayPal. I don't know. I just like it. Okay, even though the politics thing. So, but you have to ask yourself, like, what is the competitive advantage of PayPal, and how much are competitors going to hurt them? Because there are an insane amount of competitors. I mean, it's just like there's 101,000 different processors. What is PayPal going to do to make a difference? And then I'm curious, like, why is foreign revenue so much lower? Like, why is foreign revenue growth so much lower? I wonder if they mentioned that in management's discussion and analysis, or is that what we were just looking at? Okay, they talk about Brexit. I wonder if that impacted it. Okay, net revenues generated from UK 7% versus 8%. So nothing crazy there. Net revenues from the EU stay exactly the same. Yeah, the Brexit didn't massively impact their revenues, at least from a year-over-year basis. Okay, maybe it's the macro environment. impact of foreign. We have significant that have denominated the strengthening or weak of the United States dollar versus in which we conduct impacts the translation. We generated because we are subject to the risks. Okay, so maybe the massive slowdown in foreign revenue is probably just foreign exchange. Because when you convert foreign currency to a stronger dollar, you get fewer dollars. That could just be it. Looks like it's just foreign currency exchange rates that are probably hurting their. Yeah, it's definitely hurt their revenues. Okay, interesting. Let's see, net revenues, transaction revenues. What a scam! How dare they charge me for using their platform? Revenues from value-added services. Partnerships, referral fees, subscription fees, gateway fee. What is this garbage? Okay. Let's see. Interdusting. Yeah, I don't see anything wrong with this. I mean, it's a better buy than most other freaking companies out there. I mean, like, God, there's so many clown stocks. Like, why would you buy Palantir when you can buy PayPal? I don't understand. I would personally rather buy PayPal than Palantir. I'm not saying buy it. I'm not buying it, but it's not a bad company. It's highly profitable. The stock dilution isn't crazy. They're a great business. I personally use them. I don't know. Oh, the politics. Oh, they're liberal. Oh, who cares? Buy the stock. Tattoo Chef along at Dollar Tree. I love the vids. PayPal, my PayPal. Strongman, I think I make more than you. I hope you do. I hope you do make more than me. Thank you to whoever paid to have this made. You're welcome. And if y'all want a personal video, I will make any. Okay, obviously it's not going to have to be a clownish video. If you think it's going to be clownish, you need to tell me before you send me money, okay? Don't send me money and then PayPal takes some fees, by the way. That's how PayPal makes money. They take part of the payment that you send me. And but if you send me your money, you're like, "Oh, I want you to staple your nipples live." I'm not going to do that, okay? Don't be stupid. But if you want a personal video, click that link, send me $50. The price is up. I'm getting too many requests. Let's see. I bought a small position. I'm going to learn that Paul Gabriel and stock. Mo love the company and think it's a buy. I mean, I don't think it's the worst buy in the world, but I don't know, man. I just want to buy VT. I just put $1,000 into VT just yesterday. Hey, feels good, man. Maybe for international transfers with Zoom. Please, someone pay Strongman for a Tattooed Chef mukbang. Yes, $50 and I'll do it. Cash flow, my Moxie. I see it 37.5 for a half-hour call with you. What if I want to spend the whole day with you? Hey, man, if you pay me, it's $75 an hour. Okay, that's what I charge for my time. So if you want to hang out with me all day, you want to give me 8. How much would it cost to hang out with me for 8 hours? 8 times 75. If you give me $600, I will literally sit here on this camera and shoot the crap with you. I'll play StarCraft with you, whatever you want to do. You give me $600, yeah, we'll spend a Saturday together. Absolutely. But it's going to cost you $600. You better not be a freaking weirdo either. Pump my bag, strong man. Should I buy Tattooed Chef? You do whatever you want, man. I'm not buying it. The payments business model is oversaturated with Venmo, Cash App. I think PayPal will fall more. Fair value, probably 50. I mean, like, there's a lot of payment processors out there. A lot of payment processors. Crediting equity. Yeah, you credit equity when you issue shares. Debits and credits. Accounting. Hello, strong man. I'm back. Welcome back. PayPal is a decent investment. Price is okay. I don't use their services, though, so I don't understand much about. I mean, from my understanding, most of their business is just trained. Like, literally, when you people send me money on PayPal, if it's for a business purpose, PayPal takes a cut. So all those business revenues, like, I've had people that I had a sponsorship one time that I got like 4 figures for, right? And PayPal took like $88. They took part of the transaction. They took that. So that's a big part of how they make their money, is that kind of stuff. Oops, I don't know why I starred that. PayPal literally owns Venmo. At least do an iota of research before you make a comment. Ooh! But even then, like, there's a lot of payment processors out there. Probably just the increase in value of Bitcoin December to March. Oh my God. Why did it drop so much if nothing really stands out? It's all about expectations of the future. That's why these companies drop. Okay. It's not, I saw on the balance sheet that operating cash flow went down. It's like usually when the company gives guidance, that's what causes the stock to fluctuate. Let's see. Strongman uses it. I'm going all bullish to the moon. Tindy. That's right. I do. I like PayPal. That's my primary source of invoicing people. I like it. Strongman uses PayPal to buy shirts. Damn, more stock pumping, bro. Kid Fresh is going to have a field day with you. I know. I'm about to get sued to oblivion. I'm just scamming so hard right now. It was massively overvalued. It's okay. It's okay. I mean, you can buy it at this price if you like the company. When I did my little DCF, I got like $50 or something. I mean, if it went down to like 30, I'd be like, oh, interesting. At 200, you're almost able to lose money. Let's see. Why ain't you buying it then? Because I want to put money in VT. That's why. Should I buy Financial Fortress stock? Oh, yes. Oh, I'm going to pump that. Oh, please go public, Jeremy. Please. I would have content for a lifetime. Imagine Financial Fortress being publicly traded. Let's see. Strongman is the next Wolverine. I'm not a degenerate actor. They're scum. Can you look at Mercedes financial statements 2022? Well, like, yeah, for $50 I will. I'm at the point now, like a lot of people like will email me and say, hey, Strongman, can you do this? Can you do that? It's like, I don't have time. You got to compensate me. If I'm going to take, because like I work all day. I come home, I hang out with my kids and wife until 7:30 or 8. And then I have like an hour or two at night to do stuff. That's it. I can't be like, oh, I'm just going to drop everything to give you something for free. We make a feet video if I request it on Dropbox. A feet video? What do you want to see my? Okay, I'll take pictures of my feet. Take pictures of my feet. Should PayPal be worried about Apple Pay? Well, I mean, PayPal is a little because PayPal was more of a comprehensive, like, it's a more comprehensive way to manage a business. Apple Pay, you can't manage a business on Apple Pay. With PayPal, you can like generate invoices and you can track outstanding balances and receivable. Like you can do all that with PayPal. With Apple Pay, it's just like, here, I'll send my mom some money, my dad some money. My parents literally send me money through Apple Pay. So, I mean, it's not exactly the same thing, but there's 100,000 other ways to send money. Look at what Square does and what Stripe do. You know, all that crap. Even QuickBooks. You know, you can invoice through QuickBooks. It's not a bad company. It's just that I bought its shares, so it would be going down, so I sell for a loss. Let's see. How many languages do you speak? Half. PayPal owns Venmo and Braintree. Let's see. You can also charge $1,500 for 8 hours. Oh my! Hey, if someone wants to pay me $1,500, I will hang out with you for 8 hours. 100%. We'll do that every day. You just pay me $1,500 a day. I feel bad. I'd be like, yeah, you're getting scammed. What do you think about Sports Illustrated swimsuit having? You know, you email me and I'll consider if I want to do that one. Yeah, they're saying the growth of PayPal is now dead. It's a value stock that doesn't pay it. Oh, they don't pay a dividend. Oh my God. Oh, how horrible. I like they're buying back shares. It's great. At the price it's at now, it's better than it was before. Thoughts on SoFi? My thoughts will cost you $50. Let's see. Yeah, that stalker freak was texting me. He pretends it wasn't him, but it was him. I made the mistake of buying at 120. Strongly considered dumping it just to put it in broad and world index funds. I mean, that's your choice, man. Do you think it's ever going to come back? You think it's undervalued now? Or do you think it's dead? I mean, if you think it's dead, maybe you should sell it. If you think it's going to go up, maybe you should hold it. Let's see. Dumb money is chasing. Just buy large cap tech, bro. It went up a lot. You know what I saw today? maybe I'll save this for another video, but Shada has like massively underperformed VT in the last year. It's awesome. I love it. Shada. VT's crushing Shada. PayPal is a scam. I mean, they don't really do that. I mean, they did it, but it's not like this endemic thing. Let's see. Strongman, you're worried about your new corporate job. We'll find out about your channel. Not really. Worst case, I'll just find another one. And trust me, they paid a recruiter to hire me, and they paid a pretty significant amount. I would be shocked if they fired me because I have a YouTube channel. In all seriousness, the competition in the payment space is crazy now. You might as well throw darts at it. Yeah. $50. Oh, come. The $50. Dude, I paid Aaron Clary that multiple times for videos. Go search Aaron Clary accounting PhD. I literally asked Aaron Clary if I should get a PhD in accounting. And I paid him for it. Good book on the origins, the founders. Peter Thiel and Elon. PayPal is a falling knife. Yeah. Free kid freshie, but he must show his face. He won't do it. He's a bussy. All right, guys, that's it. Have a wonderful night. If you want to pay me money, see this right here? You pay me money, and you get a dedicated video. $50. $50. That's it. Okay? It's not $49. Not $45. It's not $49.99. It's $50. And if you want to be really generous, pay me more so it can compensate for the PayPal fees. Let's see. Strongman needs to confirm. Oh, please email that to me. Please. I want to see what these idiots are talking about. They have a PhD in accounting. All right, guys. I'll talk to you later. Cheers.